Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the boys that we call the Three Amigos. How you doing, Dion?
Howdy, I'm doing great.
And Matt, how are you?
I'm doing super awesome. It's the end of the year.
There you go, folks. So what we're going to talk about today is something I mentioned briefly in the daily financial news for Tuesday, December 13th, and that is that the housing crash is canceled. Kind of let me put this out there, kind of paint the vision. I'll let you guys kind of react to it. So, when you talk about economics and you're talking about predictions, it's all probabilities, right? There are very, very, very few certainties out there. But if you were gonna give me some true sermon 6, 8, 9 weeks ago, there was a path to some real pain. And what was that path? 10% mortgage rates were something that I had never considered but had to think about. Mass layoffs picking up. Inventory skyrocketing, right? It was all of these things that I had as externalities. They all kind of lined up where, you know what, if I squinted and stood on one leg, it was a possibility. At this point, all of those are off the table. 10% mortgage rates gone. 9% mortgage rates gone. 8% mortgage rates gone. 7 might be gone. Frankly, we might be sub 6. Inventory. Home builders are doing exactly what we talked about. Lennar selling 5,000 homes of inventory. They're going to be building slower. They're canceling lots. And then, of course, the coup de grace. And this is a bet I had with John Wake out in the most iBuyer-friendly market, Phoenix. Inventory is falling even in Phoenix, let alone across the country. I want to give a shout out, not Lance Lambert. Somebody else I follow on Twitter actually says inventory is down 6%. Active inventory is down 6%. So at the end of this, it's all going the way I expected. And the housing crash talk is over. It just needs to be canceled. Again, I'm not calling a boom. I'm not calling for, double-digit appreciation. That is not healthy. But this talk of double-digit drops for the nation, just stop already. What do you guys think? We'll go to Matt first.
So I'm still standing by. I still think there's going to be a 10 to 20% correction. I think it's going to be over a couple of years though.
This was definitely a year call. So yeah, if you're saying 2 years.
Yep. Yeah. I just think by the end of 2024, I think we feel some of the pain that we deserve to get. We're going to get the bill for the amazing night out that we've all had.
Yeah.
I think
the hangover is going to catch us.
Yeah, oh yeah, yeah, and there is nothing that's going to cure that or solve that. So I still believe in that 10 to 20% correction. I think that what we've done is we've kicked the can down the road. I think we're seeing some markets retreat, but I think that we're starting to see even the pricing that they're retreating. We're also seeing in many of those places inventory retreating as well, because what we talked about was very true and very right. We said, where are you going to move when your mortgage is 2.5 to 4.5? Where are you going to move? So what could change things, but then it speeds things up and in a positive direction is we start to see real deflation and we start to see those rates actually come down and get back into the low 5s. If we get back into the low 5s, it's going to be busy again. It's going to start to pick up again because everyone's going to be like, hey, I missed out on my chance at 6, 7, 7.5, 8. I now have a chance to get in at 5, and it's not this goofy ARM mortgage.
Yeah, the margin, that's what this is all about. And again, you and I have a bet. I think you're wrong. I don't think there's any chance for 10 to 20%, even if you gave me a 2024 date. Yeah. That's just my call. Again, this is all probabilities. And I think why I'm confident now is because what you just said. I think by the end of January, we could have 30-year mortgage rates under 6. Now, that's not low 5s, but that's going to be big enough of a delta to bring marginal buyers back. And if we bring back only 10% of buyers into an inventory environment that is this low.
Yep. So, but you study consumers though, right?
Yes.
You study the consumer.
Absolutely.
And consumers are sheep.
Of course. Exactly my point. That is why we're going to see. This is the talk.
I think the sheep thing is the negativity bias. That's where I think that's the issue.
Dude, that's going to flip on its head because consumers are drunk idiot. They're going to come back and they're going to say, oh my God, I can get 575. Because before, when rates were going up, everybody said, hey, I missed 3. Now people are going to see 575 and go, it's not 7.5. They're sheep.
I think people are waiting for the falling knife to stop falling.
Oh yeah. See, it's coming back. I think home ownership is is an anchor. But it's going to be fun to watch. We disagree and we have some money on it. So I have a sign, just like I have Dion sign coming and John Wake's sign. I'm going to have one, your dollar right there. I'm going to be 3 for 3 and it's going to be awesome. Dion, what are your thoughts on all this?
So actually that kind of came up in your live chat this morning during your update. There was someone commenting that they had a property listed and they just stopped receiving offers until about a week or two ago. And all of a sudden they got like 5 in one day because interest rates dipped a little. So that little tiny dip surged demand. And so if we see a dip of another 100 basis points, yes, I think demand will surge. But with CPI down, that means lending fear is going to be abated. So we're going to see a more compression on the margin. So I think we're going to see that dip
key.
Again. Right. But so here's the thing that breaks my brain with the housing crash is canceled. We had channels over the last couple of years just saying every single week, here's the reason for the crash, here's the reason for the crash, 20% by the end of summer, blah, blah, just over and over and over. They were getting 40,000 views. We talked about this a little off camera, Mike. Now they're getting 15 or 12. Yeah. And it's like people might be waking up that, hey, 2 years consistently being wrong might mean maybe they're wrong today, maybe, right?
Yeah, especially, again, back to Matt's point, people being sheep. I actually don't think that. I mean, that would be wonderful. I actually think what's happening is people are giving up on investing, which is worse. Right? They're going, hey, I don't get it. I'm afraid for my job. I need to do this or need to do that. And they've stopped watching investing videos, which is really interesting because when I look at my channel and I look almost every day, we're pretty flat as far as views, like daily financial news between 3,500 and 5,000 views a day. Most other interviews about 1,000 views, but that's really consistent. I don't get 20,000 views a video. Well, frankly, I put out 6 a day, so probably kind of hard to do that. But these other channels, they've seen a big drop off and their story's not changed and they're getting more and more negative. And I think they're going to be embarrassed because the housing crash is canceled. Again, Phoenix, Vegas. I even talking with Brian Lebo. Brian Lebo and I have a bet. I'm going to have a $4 up there because Brian's going to owe me $1 because he actually texted me yesterday and he goes, Michael, we've already done like 475 homes or something like that in December. Median home price has not moved because he and I have a bet over 3 months and 1 month's done. He's going to get a surprise uptick because the higher end is going to transact more, which is going to pull the median higher. This is all playing out exactly how we've talked about it on this channel. And again, what the 3 of us talk to are people that are doing the work. The fear-based mom's basement Netflix watchers, they're not our audience. They're in the parking lot booing because they're hating on themselves. I can't even hear them. I'm on the field. I can't hear people out in the parking lot. Dion.
So the crash channels, I have their next narrative. I almost don't want to speak it into existence, but I want to get ahead of it with our viewers. Because so when they hear it, they don't go, oh, they got a point. In the last 3 months to 6 months, people purchased at the peak of the year-over-year inflation, and we've seen it come down. We're still up year-over-year, but we're down from the peak. So you're going to start hearing all the crash gurus going, look how many people are underwater.
Oh, I've seen that already.
This is going to cause the housing crash.
Steffen did that yesterday. 227,000 people are underwater.
So I watched that too, but at the end of his video, he did a really good thing where he was like, look, I got money. I'm hunting for the next deal. You should be too. Like he didn't go,
oh, good. I did.
I
stopped watching. I'm like, oh my God, Graham joined them. I'm like,
no. So yeah, it's kind of like the other day with Ken. Ken said this and I was like, or his group said this. And I was like, what the heck? And then he fixed it. Graham said it and then he comes around. So sometimes go to the end of their thing. Yeah. But I think they're going to say people are underwater on their house. Look at how much this is going to cause a crash. This is what happened in 2008. Look at all these foreclosures happen because people couldn't, blah, blah, blah. And people are going to stop thinking right there. They're going to say, okay, yes, so people are underwater. That's going to cause a crash. Not thinking, one more step thinking, so there's more people motivated not to sell. That's so weird. Maybe that's going to prop up prices and limit supply in this place where demand is going to go up because interest rates are going to compress. And no more crash. So crash is not only canceled, but the next iteration of what they're going to say there's a crash for is already canceled.
Yeah. So let me just give you some more data on that because you're absolutely right. I'm already seeing, because these people are grasping at straws at this point. They're like, God, what's the next thing that I can talk about so I can pay for my rent or whatever. They're all renters. It's hilarious. But here's the deal, right? So if you zoom out and look at housing prices, the trend is like, you can see a line going up. But if you zoom in, we have this thing called seasonality. And Graham actually talked about this a little bit before I stopped watching it, right? If you look at the winter, For years, seasonality rolled over. So here's the deal, folks. Even in 2020 and 2021, where we had median home price go up 20% or whatever it was, if you bought in November, you were underwater. And here's the second and the big kicker. What is the average tenure of a homeowner?
7
Is
years.
it 3 months? Is it
No,
4 months?
7 years,
Is
8
it-
years.
Yeah, it's 7.5, 8 years. And I believe what's called housing turnover, to use a very sophisticated term, actually increases. What that means is they stay longer. So is anybody underwater seasonality? Yes. Is seasonality a little worse this year? Yes. Is anybody going to be, are a lot of people going to be selling their homes after buying it in 3 months? Are you fucking kidding me? I mean, is that really what we do? Here's the deal. Even if houses didn't go up, you'd be underwater because there's this thing called selling costs. Nobody moves. Nobody plans to buy a home and sell in 3 months. I mean, this is an idiotic statement of people that don't understand the real world. It's crazy.
And it will get views.
Well, they got to pay for their rent somehow, so it's okay. Let them, let sheep and people in the parking lot watch them. We're gonna keep talking to people doing the work. Matt, you want to say something?
I just bought a deal yesterday.
I just closed one. Yes. What is today? Monday. No, what is today? Yeah, Monday.
We have an accepted amount offer on a potential first-time partnership offer, out-of-state investment. So
Nice.
yeah, I'm looking for that next deal too.
This is what
So,
makes the
folks,
book
right
fun.
here, the three amigos, 87% of home buyers aren't in the market. We are doing the work and finding deals. I bought a deal 51 days ago when the world was ending. It lists tomorrow for $106,000 more than I paid for it.
Yeah.
In the worst time of year. So we'll see what happens. I'll keep people updated.
That was the biggest shift that I saw was just the Thanksgiving, Christmas rent. So seasonality, for those of you who don't know, and I know you guys around the country think you have seasons.
I have wet and dry. Those are my two seasons.
We have minus 20 to 100. So
That's
those
a
are
season.
those are 4 seasons. And what's interesting is November, December, January are dead for rents every year, every time I've ever done it.
Yeah.
And the interesting thing was we actually took a unit that we had on in the beginning of November or middle of November, right before Thanksgiving. We were getting very little traffic, and the traffic that we were getting was awful. It was awful. Couldn't fog a mirror.
Better to keep it vacant.
Right. Exactly. And that's discipline, right? Because you're like, let's just fill it. Don't just fill it. Don't do that. And so we actually did some minor adjustments in the unit, some minor upgrades, like less than $2,000. And then we popped it on the market, and then we had 9 showings on Saturday. Do you guys realize 9 showings? What is it? 13, 14 days before Christmas? 9 showings, 14 days before Christmas.
That's yeah. We're gonna find out, right? My property lists tomorrow. It's like the worst time of year. For 106 grand more than I paid, I'm into it about 40, 42 grand. Right. So after selling costs, blah, 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 I'm gonna make, I don't know, 30% of my money in 51. Well, actually by closing, it'll probably be 80 days, something like that. So we'll see.
That's
I love Crash Bros, man. It's freaking scared 87% of the people away. We should send them all thank you cards. I mean, they're just amazing. I just love it.
No,
Dion, bring us home, man.
You know what you have to send them? Silver polish for finishing second.
Silver polish.
The main thing to remember with a housing crash is, and write this down, it doesn't matter. The largest reduction in home prices market-wide that we've ever seen in a 12-month period was 8.9%. That means, let's say we have a 10% drop. There's almost no point in any market where a 10% drop doesn't mean that paying rent for an extended year, not getting cash flow, not getting the principal pay down, not getting all of the tax benefits makes it worth waiting for timing the market. And I always butcher this because I'm not a stocks guy, but I use that version of dollar cost averaging.
Yeah.
So with stocks, it's consistent amount of money on a consistent timeline where you reinvest so that when things are going up, you buy less. When they're going down, you buy more. Statistically, very stable way to increase your net worth. In real estate, it is save the money that you can, keep your credit score good, hunt for the great deal. It doesn't matter what's going on with the market. Don't wait for interest rates. Don't wait for prices. Don't wait for anything outside of what's going on in your life to know if this is the right day to buy a great deal or not.
Awesome. And Dion, where can people find you?
right here on YouTube, Dion Talk Financial Freedom.
Matt, bring us home. Final thoughts?
Lumberjack Landlord, YouTube, and on Instagram, sharing the daily slog of thus being a real estate investor and operator. Take heart. Keep on doing the homework. You're going to miss the deal if you stop the daily discipline. You're going to miss on deals, because this deal that I got is ridiculous, and I can't wait to share it.
Yeah. I want to kind of close with something I got from Jason Hartman. I think it was yesterday we shared on the Daily Financial News. There's not one real estate market. Yes, I constantly battle with housing crash. Folks, yes, I've looked at the national housing market for 30 years. I'm a geek. I like data. I am a trained economist. That's what my degree is in. This is fun for me. But most people watching this, 99.999% of you, go get a buy box, look at it every day, track what's going on, learn, average, and write great deals. What I talk about nationally speaking and get all riled up about doesn't matter. If you're in Phoenix, pain. If you're in Vegas, we'll see. If you're in most of the other country, let's go. Let's go find a great deal. And again, 87% of the people are sitting on the couch. I like those odds. So folks, do the work one rental at a time. All right, we will go to round 2. Thanks, guys.